A beautiful morning to you this Wednesday. Welcome to the midweek edition of Business Morning. I'm Ini John Mekwa.
And I'm Ladi Williams. Beautiful morning indeed. Let's kick off with what's in the news. Oil prices fell for a second day today on the potential of an Iranian supply return, and as investors sold on speculation that inflation fears might lead U.S. Federal Reserve to raise interest rates, which could limit economic growth. U.S. West Texas Intermediate crude futures dropped 73 cents to $64.76 a barrel, following a 1.2% fall on Tuesday. Brent crude futures also fell 73 cents to $67.98 a barrel after dropping 1.1% yesterday. Oil prices were also under pressure amid reported progress on talks between the United States and Iran to revive a deal limiting its nuclear program, which could lead to a lifting of sanctions and a resurgence of Iranian oil exports.
And back here in Nigeria, the federal government has issued a 2-week pre-enforcement notice to unauthorized dealers and users of GSM network boosters, stressing its illegality in the country's telecommunications industry. According to a circular issued by the Nigerian Communications Commission, the sale, installation, and usage of the booster is a criminal offense, punishable by fine or imprisonment. The Commission adds that upon the expiration of the 14 days deadline, it will also seize any equipment used in the legal enhancement of network coverage.
Interesting. Well, Polaris Bank Limited, one of the leading retail banks in Nigeria, unveiled a digital banking platform called Vault in Lagos, Southwest Nigeria. At the launch, Managing Director, CEO of the bank, Innocent DK, says the possibilities offered by Vault affirms their commitment to accelerating financial inclusion and promoting a contactless lifestyle, especially in the era of COVID-19 pandemic. Do take a listen.
The walls have been pulled down, the digital landscape expanding, the barriers are being ripped, and the curtains peeled backwards, all in a bid to give customers, both real and potential, more tools to carry out more transactions seamlessly and on a reliable digital banking platform. Polaris Bank wants to lead that charge from this occasion.
That's VULTE. Visit the Google Play Store or Apple Store now. Vault is available to Polaris and non-Polaris Bank customers.
To give the customer greater freedom and control on a digital transformation journey, Polaris Bank is unveiling Vault.
And what is critical today to consumers, to customers, it is one, this whatever solution or whatever app they use today must be able to offer that security. They trust that if you keep your money in the bank and you transact, that you're transacting under a very safe environment. Secondly, it also gives the customers the ability to transact or do their businesses where they want, how they want it, and the way they want to be served.
Therefore, when you create new markets, then obviously you are creating an opportunity for others to develop. And I think this is what we should continue to promote.
Vault is not another mobile application, as we are told. It's a mobile digital bank in your hand, affording you total control of your financial service needs. You serve yourself the way you want to be served, whether for instant loans, making simultaneous multiple payments, or even opening an account. Vault allows you the luxury from any location 24/7.
Our customers can go to any of the stores, depending on which device they use, Google Store, Google Play Store, or Apple Store, to download Vault, VULTE, from the stores. And that opens our services and banking services as well to the globe as a whole.
Polaris says Vault is for security, a digital banking solution, a digital application, and a conveyor belt for financial inclusion with the ease to do more at the click of your device buttons.
And the successful adoption of electronic payments in Nigeria is encouraging the entrance of payment service providers, which sees Nigeria as a promising market. As of 2020, the International Trade Administration recorded an estimated $12 billion e-commerce spending, and Konga.com is an active participant in that e-commerce space. Mr. Nick Mudia, the co-CEO of Konga, is here to share their journey so far with us. Good morning, Mr. Mudia.
Good morning.
Thank you so much for
here.
joining us.
Yes, good morning.
Yeah, so, well, we know that Konga started in 2012, and then I think there was a shift in ownership, and then you acquired it about 3 years ago. Tell us about your journey.
It's been an interesting journey. We acquired the company about 3.5 years ago by the Designers Group. And since then, we focused on turning the company around. This was a company that was losing hundreds of millions monthly, and we've been able to sort of redesign the cost structure to make it a profitable, sort of a break-even company heading towards profitability. We've redesigned the entire processes to make it an ethically sound company. One of the things that were sort of mandated when the investors came was to create sound corporate governance to make it of international standard, which is what we've done. So over the past 3 years, we basically rolled down our sleeves, focusing on the right things, driving the cost down, and then expanding on the growth.
All right, fantastic. Well, for a lot of people, all we know is Konga.com, the marketplace. Do you have other subsidiaries?
Oh, Konga is a group. Konga.com is the mothership, of course. We have retail stores. We have retail network across the entire country. We have Konga Pay, which is basically creating financial convergence to serve the unbanked, underserved, and all of those in the system, and to grow the banking system as well in Nigeria. We have Konga Health, which is now being launched.
Okay.
What's that about? I'm curious.
So Konga,
in a time of COVID-19, anything health will catch your attention.
Exactly. Konga has benefited quite, I wouldn't say benefited with the COVID pandemic, of course, because what it did for us is that it exposed e-commerce to the country. People that could not go out now had the ease to shop online, pay online, and then we deliver to your step. So similar thing with health. What we are trying to do is to create disruption in the distribution of healthcare in the country, and we are launching that in the next couple of weeks. So what that does is that we'll be partnering with multinationals, OEMs, and even donors internationally that will come, create accountability, make it easy for them to see where their money is going to, and distributing medicines to the nooks and corners of the entire country. We want to be everywhere, and we want people that deserves quality health product to have it in Nigeria.
So you talked about you came in, you rolled up your sleeves, and you changed strategy, and you changed from making losses to profit. What are some of those things that you would say are the outstanding features? Why Konga? Why should I think of Konga?
Shopping on Konga, yeah.
So Konga, of course, is Nigerian, as we know, built and run by Nigerians, owned by a Nigerian.
I mean, you are in Nigeria.
Yes,
we can see you here.
Thank you. Yes, I am, of course, born here, of course. And then the investors are Nigerians. They believe in creating a platform that will help Nigerians to grow. So we are creating ecosystems. We are creating the network of stores. We are creating new subsidiaries across the group, and most importantly, although it's Konga.com, we are expanding our merchant base, which of course are the bedrock of the company. We have customers that we rely on us. We want to give them value. We want to give them quality product to give the Nigerians this international standard products.
Okay, I'm sure it's a very big vision you have there, but can you tell us about the Konga roadmap?
The Konga roadmap is, like I was saying, is to continue to grow the ecosystem. We want to grow the network. We want to be everywhere, right? At the middle of that are the customers and the merchants. So we want to bring in new subsidies. We want to partner more. Recently, we started a partnership with DFID, with the UK government, to bring agricultural products to farmers in rural areas. We want to grow such partnerships. We are working with as part of this health program, we will be working with donors across the world that are bringing products into the country. We are expanding that network so that the quality of our services will be reached across everyone.
Interesting. So it's looking at health and all the
you talked about the merchants and the businesses and all that.
Yes.
Obviously, this should be an avenue of creating employment, you know, at this stage in the country when unemployment is
really high.
Is a huge, you know, so how are you mopping up this unemployment?
Very good. Starting tomorrow, we have one of the largest SME, what we call the SME Connect in Nigeria. That's going to be one of the largest virtual session where we bring thousands and thousands of merchants on board. We'll be discussing how they're going to make money, how they create jobs.
Yeah.
We believe that within the next couple of years, we will create thousands and thousands of jobs using this network. We are creating jobs using the franchising network, where we get very close to the consumers and they deliver to the customers. So these are some of the things that we are doing. Next week, if you talk about empowerment, or you talk of some of the things we are doing to grow this business, next week, for instance, we have the tech week. As we all know, there is the global shortage of components. Computers are in short supply. Laptops,
even in the world now,
phones is in large supply.
Chips, yeah.
So
Chip
getting
shortage.
those things into the country is a lot of work, especially in Africa where we are not a priority. So what we've done, using the Conga network, using the Conga ecosystem, using the partners, and most importantly, designers group, to work with specific OEMs, starting from next week, introducing what we call the Tech Week. We are bringing in thousands and thousands of laptops to enable students go back to school, enable teachers teach their kids. This we are doing with HP, we are doing with Lenovo, and of course in partnership with Access Bank, to make these products accessible for students and to anyone that
is this all in Lagos? Because sometimes it seems the goodies end in Lagos, and sometimes not even in the rural parts of Lagos. So are we
really
taking into
yeah.
cognizance the people in the rural parts of the country, not even just in Lagos?
This is the strength of Conga. We are in every state of the country. Every state. Wow. We have distribution centers. We have exchange centers. We can deliver products to every nook and corner of the country. So when you place these products online, we can deliver to you in a matter of days. In Lagos, you can get it the same day. It doesn't matter where you are, Kano, you can get it in a couple of days. We have distributed network. We have distributed warehouses that makes this possible for us to do. And also, we have retail stores. So if you go across the country, you see Conga stores here and there. You can walk into any of these stores, pick any of these products. We make sure that these products are available, not just for Lagos, because this is easy. Lagos is easy. But creating and making these products available in rural areas is the challenge. One of the things we are also doing is launching what we call the digital mobile warehousing, where we bring products at legal prices to customers or consumers across the entire country. So within the next couple of days or within a couple of months, you'll be seeing some of this roll out. But starting from tomorrow, the SME Connect brings in thousands and thousands of merchants. We will tell them how to make more money. We believe that when merchants are profitable, we will be profitable. We believe that when merchants are happy, our consumers are happy. And then we are also then giving them avenues to create a lot of
What are the requirements, what are the requirements for this merchant and even for the tech, skills program that you're doing? What are the requirements? How do people enjoy?
If you go to any of our social media handlers or conga.com, you'll be able to register. It's free. We've seen tens and thousands of registrations. We launched it 2 days ago, and it's happening tomorrow. It's going to be chaired by the group chairman. Okay. And we've seen tens and thousands of registrations to this event. So I recommend anyone that has a business, small, big, register. It gives you opportunity to know how to sell on Conga, how to make money, and how to create jobs. On the Tech Week, conga.com, go to conga.com, place any order you want, and it will be delivered to you.
Okay. Well, you did mention being in every state in Nigeria. How have you been able to, manage the logistics constraints, with all the issues going on now with insecurity?
Anyone that says it's an easy job is lying. And that's what sets us apart, right? So we believe in bringing logistics very close to the customer. what we've done is invested in multiple warehouses. I think I've said that a few times already. We've invested in infrastructure in every state. We have exchange centers in these cities, and we have, luckily, with the right security and the right approach to our processes, using technology, able to track our vehicles, able to track our products. We know where you are at any given point in time. We're able to deliver these products to you. That's how we've been able to do it.
All right.
Okay, so the Nigeria Communication Commission reports that about 122 million Nigerians have internet penetration. Now,
Yes.
Conga is e-commerce. That means we're doing online.
Yes.
We have the constraint of the internet, and even when you have the internet, the stability and things like that.
Yeah.
What's your market share, and how do you hope to overcome the hindrance that comes with internet penetration in Nigeria?
With e-commerce, we have addressed e-commerce in Nigeria the Nigerian way, or what we call the African way. There are traditionally 3 challenges with e-commerce, and that is logistics, payment, and internet infrastructure. So one of the things we've done is to convert Conga into what we call an omni-channel. An omni-channel means you can come to conga.com, place an order. Or you can go to any of our physical stores, place an order if you are not versatile. Also, you can go to any of our stores and we'll place the order for you on conga.com. That means we are making e-commerce run the African way. In addition to that, I would say people talk about internet penetration, logistics, and payment as the traditional challenges. There are challenges around ethical selling, which we are bringing in as part of the corporate governance. We believe in taking control of certain products. We believe that there are products that everybody wants. For quality's sake, for supply chain sake, we take over these products and we distribute them. We want Nigerians to have access to quality products across.
Okay, so looking at the e-commerce industry and Conga, what's your outlook for Conga and the e-commerce industry in Nigeria?
Earlier you asked about the market share. Unfortunately, we don't talk about market share, right? Because we are still a privately held company. It's also not a secret that a lot of companies, because we've broken even and we're heading towards profitability, growing very fast and running an ethically sound company. It's not a secret that a lot of investors or partners are coming in to partner with us or to work with us. What I say, stay tuned in this space because we have big things coming in terms of partnerships, in terms of investors, and who knows what is going to happen.
So you're still keeping it in the wraps. That's what you're trying to
on the wraps.
There are certain things you cannot discuss.
Okay, but I hope you can share with us some of your policies, that assures your customers of quality service. For instance, if I want to use Conga, I have a complaint, I need to return a product. Some of those policies that protect the interests of your customers.
There are 2 fundamental policies or ways that we protect. One, we operate what is called the escrow system. So when you pay to us, the first thing we do is that we do not remit the money to the merchant until we know you are satisfied with your product. If within 7 days you are not happy, we return your money. That is one step. The second step is we have a world-class customer service that operates 24/7 that you can call, make complaints, go to any of our social media sites, and we'll address your case. We have return policies. We have arbitration processes. We have different ways to make the customer comfortable. We believe that if we are able to address your case, we are able to address your issue once, you'll come back. That is why we put the customer at the heart of what we do.
Fantastic.
All right, thank you so much, Mr. Nick Mudia, the co-CEO of
Conga Group.
Yeah, for sharing this morning with us.
Thank you so much for appreciating.
Yeah, enjoy the rest of your day. Well, AFEX Commodities Market Update is next. That's after the break.
Welcome back. You're still watching Business Morning. Time for the AFEX Commodities Update. A lot of the commodities were unchanged for the week 11th of May to 17th. But was this before the release of the inflation figures? We'll get more details now from Michael Martins, portfolio manager at Apex. Hello, Michael. Great to have you. Good morning.
Hi, Ladi. Good morning. Thank you for having me once again.
Great to have you. Well, so how do you expect the moderation in the inflation rate to affect your exchange?
So some of the dynamics that we see play out in the commodities market is the fact that, and I think we've spoken about this in recent time too, how the fact that most of the commodity prices that we see play out in the commodities market, they sort of act as a leading indicator for what happens in the inflation market, particularly the food inflation. And we've also spoken at length about how there's a very strong correlation, sometimes as high as 80 to 90%. Strong correlation between the inflation in the inflation numbers and then the prices that you're seeing for commodities across board. So we believe that if the inflation numbers continue rising sufficiently in the coming months, it's going to serve as an indication of what has already happened in the commodities market, which is ideally what we have predicted for a long period of time, which is to say prices will continue to rise significantly.
All right, so Michael, well, just before we continue with the conversation, could you take us through the movements for the week in your exchange?
Excuse me, I didn't get the question well.
Can you take us through the movement of commodities prices in your exchange for the week?
Oh, yes, sure. Thank you very much for that question. So the total value of transactions traded on the exchange in the week under consideration fell by 79.43%, from around 2.09 billion to around 0.43 billion naira. The total number of contracts traded on the exchange also fell by 83.68%, from around 130,858 contracts to close the trading week at 21,363 contracts. The total number of deals also fell by 70.83%, from around 24 deals to close the trading week at just 7 deals. The AFEX Commodities Index, which is the ACI comprising of maize, soybean, paddy rice, and sorghum, went up slightly by 0.66%, from 383.74 points to close the trading week at 386.27 points. The AFEX Export Index, which contains ginger and cocoa, remained unchanged in the week under consideration at 146.57. With regards to the total volume of contracts traded on the exchange, the total volume of contracts for maize fell from 130,843 contracts to 15,007 contracts in the week under consideration. And soy, we however saw a bit of an appreciation in the total volume of contracts traded for soybean, going up from 15 contracts to around 6,348 contracts in the week. For all other commodities comprising of paddy rice, sorghum, cocoa, ginger, sesame, and cashew, we traded little to no volume across board on the exchange. With regards to price changes on the exchange, the price of soybean went up by 3.21%, which was the top gainer for the week, went up by 3.21%, gaining naira and 82 naira in the contract value to close the trading week at 30,635 naira per contract. And the price of cashew contract also went up by 0.40%, gaining 171 naira in the contract value to close the trading week at 42,818 naira per contract. And lastly, we also have the FETC, which remained unchanged at 14,008 naira per contract. All other commodities under consideration also remain unchanged in the week under consideration. And as always, and as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, you can download our app on iOS and also on Android. So that's by and large all of what happened on the exchange in the week.
All right, Michael, thanks for that. But there's a phrase making the rounds on social media about in the cryptocurrency market called, buying the dip. Do you see the same phenomenon occurring in the commodities market?
So yes, we do see that same phenomenon occur in the commodities market, and we have alluded to that a lot of times over the course of this show. So what we tend to see in the commodities market is the bullish market starting during and around the period of harvest. That's the month of October and November. And then you sort of see that bullish market run significantly till the month of February, sometimes extending to the month of March. And that's usually also the time period whereby some procurement officers of major buyers of some of these commodities tend to stay away from the commodities market because they've procured a significant portion of the volume that they would need over the course of the entire year. So those are usually the time periods where you would see a dip in the commodities market before prices continue upward. But this particular season, we haven't seen that play out significantly. What we did see this season is a period of continuous sustained consolidation in the market where prices are just ranging between plus or minus 5%. But to truly answer the question, I think it's also important for us to define what a deep is. So some of the financial literature that I have read would suggest that a 10% drop in an asset class from its high would indicate a correction, and then a more than 20% drop in the asset price of an asset would indicate a bear market. Right, but the problem with that sort of analysis is that it doesn't cut across board, and you can't particularly generalize, right? Because a 10% drop in a cryptocurrency market or a fixed income market is not the same as a 10% drop in, say, a commodities market. But I think the more important sentiment would be to say, when people say buy the deep, what they're saying is how do you take advantage of market corrections? And it's a combination of different things, right? When you're doing your analysis, whether or not you're doing it from a technical point of view, whereby you're analyzing price floors or resistant points and anticipating points where price is going to reverse, which would be the dip, or you're evaluating things from a fundamental standpoint and you're trying to evaluate the sentiment of the market or general policies that are coming out. So those are two different things that you can combine and sort of analyze where you need to buy that particular deep, right? But the most important thing would also be market timing, right? Because getting into the market at the wrong time or getting into the market too early is just as bad as being wrong about the direction of the market. So when you want to take a position in the commodities market, for example, and you already have the information that dips are more likely to happen in the month of February and March, then you can accumulate your capital in order to take advantage of that price information and that price knowledge.
Great investment information Michael is giving us this morning. Thank you, Michael. But just before we let you go, now we noticed that a lot of the commodities, your commodities, had their prices unchanged, and we'd like to understand why and the implication of that.
So I mean, so what you see reflected in the prices on the exchange is a pure reflection of activities going on in the market, right? And you'd have to imagine that depending on the commodity that you're considering, the dynamics are different, right? So one thing you would notice is that for certain commodities like grains, particularly for maize and soybean, you'd see a lot of price movement happening depending on the number of activities that you have on that particular commodity in the week under consideration. And that's partly because of, number one, the liquidity that you have for that particular commodity, and then by extension, the volume that you also have in the commodities market. For all other commodities too, it becomes extremely hard for you to replicate those same price dynamics, considering that they don't have the same levels of liquidity, right? The export market is also another one that you could also consider being significantly different from the grains market, because of course they start their own season slightly earlier, so they also end slightly earlier than all the other commodities on the exchange. So you tend to see long extended periods whereby you don't see any market activity happening with that particular commodity, and by extension you don't see the prices changing significantly.
All right, Michael.
All right.
Thank you so much for that update. Do enjoy the rest of your day. All right, so let's talk to Yusuf Ogumbi, now investment manager at Afex. Hello, Mr. Yusuf. Great to have you.
Good morning. Nice to be here again.
Good morning.
Good morning. Nice to be here again.
So, how has it been getting financing for the supply chain of the agricultural sector, especially at this time when, insecurity remains a huge challenge?
Thank you for that question. Quite intuitive. What I would say is there's been mixed reactions getting financing for the supply side of the supply chain generally. Because of a number of things. Risks, like you mentioned, one of them, the insecurity that we've seen so far, which tends to increase the risk. But then on the flip side, what you then need to do is to structure the product or to structure the financing such that investors are comfortable with what they are getting. So you are balancing the risk-return profile. And you also realize that if you are able to balance that well, investors are quite comfortable with the nature of the product. They will typically come into the market, provide financing, critical financing to provide to support the supply side of the market. And don't forget, the supply side is very, very important. Without it, we'll probably face some serious situations on our hands.
Yeah, but what's the impact of that financing the supply chain? What does it have? What impact does it have on the farmers?
Massive impact, massive impact. I'll go from top to bottom. So if you look at, there was a World Bank research some years ago that said that financing the supply side of the agricultural value chain provides 11 times the impact as against investing in some other sectors in the country across sub-Saharan Africa. That's a clear indicator of what impact you might be expecting. If you also look at basic economics, we talked about the factors of production, land, labor, capital, and entrepreneur. A typical supply chain participant has land, they have the labor to provide, and they have the entrepreneurship to also bring onto the table. But on many occasions, they don't have the capital. So if you're able to provide that capital, you complete the equation and you are able to produce comfortably well for the country. So the impact is massive. That's on the production side. For the livelihoods of these supply chain participants, we've observed clearly that if you're able to consistently provide this this financing to these participants, you are able to impact their poverty figures. So take, for instance, some of the, as stated in our impact report, farmers that have been able to work with us, supply chain participants that have been able to work with us for like 2-3 years, they are significantly higher than the poverty line in the country, in the national poverty line, which speaks to the importance of the financing that is provided to these farmers, the support that is provided to these supply chain participants. So the impacts are significant, I must say.
All right, tell us about the opportunities for growth in this supply chain.
Significant opportunities, because quite a number of the commodities, quite a number of the products that we consume in Nigeria, we are still in deficit. So you look at the maize that we consume, soybeans, significant for the poultry industry. We still have a deficit in some numbers still tell us that we have a deficit in rice production. And it then tells you that if this staple, we are still in a deficit on this staple side, it means that we need to do more in order to cover. So the room for growth is wide, and we need to do more to cover for that deficit. So that's on the one hand. On the other hand, you have industries also expanding, which means that their demand will continue to grow, the need for these items will continue to grow, which then boils down to the same statement saying that the opportunities are massive, the room for growth is wide, and we just need to continue to do more of the support financing that we have been providing so far.
Well, just before we go briefly now, how has AFEX been able to maximize these opportunities for revenue generation?
Yeah, contrary to what a number of people think, there's actually significant value at the bottom of the pyramid, which is where a lot of these participants operate. So you look at a case where there are market creating innovations are brought about by AFEX. And that means that if you are able to provide services that people need, but then they don't have access to, they are willing to pay a price for it, which then means that you are able to kill two birds with one stone, as the saying goes. So you are able to provide that impact, provide financing, provide support to the supply side. And at the same time, you are also able to earn some revenue from it. And it's sustainable. Basically, that's what we call impact investing. So it's profitable, it's sustainable, and it impacts the lives of these supply chain participants.
All right. Thank you so much, Mr. Yusuf Ogunbi, Investment Manager at AFEX.
Thank you very much.
Thank you for sharing your thoughts with us this morning. We'll just take a moment and we'll be right back. You're welcome back. Well, we now head over to the market where Anita Edet is waiting. And yesterday, the market continued in the red trend, I would say, second day this week. Hello, Anita.
Good morning, Ini. Yes, the bears are still in control again, a second day, and the market is still in the red. Of course, you know, the major factor for that is Boa Cement, because on Tuesday, the market was actually trading positive. But the second day downturn on the share price of Bua Cement, which went down by 5.71%, was the major reason why the market fell by 0.72%. And then, of course, when you look at that, you also take a look at the market breadth yesterday. It was also a negative market breadth, about 22 losers against 16 gainers. So, you know, it's still, traders say it's profit-taking. But of course, you know, the market reacts to certain news like that, in as much as you might say, okay, that there's been some gains recorded by some market leaders, market bellwether equities. But of course, the market just didn't respond to that. It only responded to Bua Cement's downturn. So take a look at the volume of trade in the red also. So it means that the market, the participants in the market are not really looking up to equities. On a day-to-day, we had the volume of transactions was down by 42.8% at more than just about 204.64 million units. And then, of course, the year-to-date loss is currently at 2.0%, and that's month-to-date loss is 2.2%. So to tell us more about the stock market, let's join Abdurrashad Momo at TRW Stockbrokers. Good morning, Abdurrashad.
Abdurrashid, please. Thank you.
Abdurrashid, okay. Yep. Please, the market, as is for a second day in the week, it's in the red, and we've lost about 1.16% in just 2 days, which has knocked off all the gains that were recorded in the first, within this month. We were up about 0.72% last week. So just in 2 days, we've gone down by 1.16%. So tell us, what is driving this sell pressure?
You see, one thing, you need to look at market in different scenarios, right? Market has a cycle, right? There's a market cycle. And if you're aware of the adage, sell in May and go away, right? A lot of where fund managers close their books, go for summer and everything. It also affects our market. But the nitty-gritty is that our market doesn't actually sell in May, but actually sells in June. So mostly what we are seeing now are more of corrections. And I don't see any threats to the market now. All the highs we've seen, the lows which we experienced in I think March or so, the market has not hit those trends yet. Until market starts threatening support levels, they will know that the full trend is over. For now, what we have seen is that we are seeing more of correction. Market is trading sideways. Mind you, last week or last month, the market traded in 2 days, right? We made so much gain, and what the bears are doing, and what the bulls have made in 2 days is what the bears is taking away after 1 week. So you can see that anytime the bears come in, when the bulls trigger, they will spike up again. The main strategy for the market, as I've told people, those gains we used to have last year or early in the years are over. What we're having now, people that make about 50, 60% on a trade, if you make 2%, you're out of the market because the market is making lower highs. We have not seen a new high, and we have not seen any new low. As long as we've not seen any new low, the market is still intact. And the strategy is buy in weakness and sell in strength.
Okay. So with that being said, on Tuesday, yesterday, the NGX launched the Stock Africa is Made Of campaign, which is expected to promote the NGX position as a leading capital market infrastructure provider. So now with the market's year-to-date loss at 3.1%, and Nigeria's stock market has been, the best performer, I think, in about 2 or 3 consecutive years. Do you still see us having maintaining that position within this year?
You don't make gains every year. Market has a cycle. You don't make gains every year. The only good thing I can say is that what actually triggered market last year was the money market rates were very low, and a lot of investors pulled into the stock market. Now the money market, the rates are getting higher, so monies have been moved from the stock market. From the stock market to the money market. But we still have some players that still feel, even with current rates, they can still make that rate in a week or in a month. Another good thing is that most of the financials we are still seeing coming to the market, they keep getting better and better. So as long as we have good financials, I don't see any threat to the market for now.
Thank you, Abdul Rashid. Okay, thank you for that, for bringing us up to speed with okay, so now we'll be going on a quick break now. Ini, that's it.
Before we go on that break, some interesting things that Abdul Rashid said there, that in the equities, it's not selling May and go away. It's actually selling June and go away. So I guess we're looking forward to that. But thank you so much, Aniti, and your guests for the information. We'll now take a break. When we come back, we'll head over to London. Welcome back. We're heading over to London. Inflation is not looking so good in the UK. Juliana is standing by in our studios there. Good morning, Juliana.
Good morning, Inni.
UK inflation is up more than double at 1.5%, and lifting the price cap on standard tariffs back to pre-pandemic levels has a lot to do with it. What else has driven this?
Good morning, Annie. Well, there are several things. One of them really is that the price of a barrel of Brent crude recovered, and that set petrol prices much higher. Utility bills in the month of April were much higher than they were a year earlier. And this 1.5% jump, even though it spooked investors, which is why the FTSE All-Share is trading down at the moment, it is in target with what the Bank of England projected a couple of weeks ago. They also believe that inflation here in the UK will exceed the 2% target by the end of the year. The Governor of the Bank of England, Andrew Bailey, has been commenting on today's data, and he said he will not hesitate to shift monetary policy. At the moment, interest rates are at a historic low of 0.1%. They could rise anytime soon. Andy Haldane, he is the outgoing Deputy Governor. He was the lonely Monetary Policy Committee member to vote to raise interest rates, because it has been a massive topic of conversation over the past couple of weeks. But even though 1.5% is very high, if you compare it to what we saw across the pond in America for the month of April, that was 4.2%. So I think a lot of economists here in the UK are wondering whether this is just a case of bottlenecks and recovering for the pandemic, or if this is something more serious. We'll have to wait and see.
Yeah, we'll certainly wait and see. Well, KKR and Co have agreed to buy John Lyne Group for £2 billion, tapping into an infrastructure portfolio with potential for further growth. What's the interest at this time?
Well, as you just pointed out, further growth is being one of them. John Lyne is one of the oldest construction firms here in the UK. They have a vast presence across the globe in Latin America, North America, Europe, Asia, and of course Britain. They have signed off this deal with KKC. And also as well, I think a lot of the equity firms are very interested in tapping into the government's zero carbon emissions infrastructure. Britain are trying to be at the forefront of that. It's going to be a topic of much discussion when the G7 ministers meet in Cornwall next month, and they've gotten in. The construction company is very, very old, sits on the FTSE 100, and as soon as this deal was announced, even though it had been mulled upon a couple of weeks ago, their shares rose 11%, so it's definitely seen as a win-win.
And the UK government has found a way to bring new blood into the agriculture sector. Tell us about this new scheme.
Yeah, this is an interesting story, basically looking at Britain's agricultural sector, predominantly run by those who are over the age of 60. I believe here in the UK, the average age of a farmer is about 59. But there have been so many different changes, particularly after Britain departed from the European Union. And the Environment Secretary, George Eustice, believes that a lot of these old farmers are a little bit resistant to some changes that would make their farming a lot more greener and cleaner. And so one of the ways of getting them out and getting some new blood in is to pay off these farmers, depending on how big their land is. Every year in this country, farmers are very, very lucky lucky. They receive about £21,000 in grants. If you're lucky enough to own lots of land, then you could receive actually £500,000 a year in government subsidies. And the government are thinking those goodies will be good enough to lure these old farmers away and get some young blood in so they can start being a lot more cleaner and greener in the way they produce their products.
Well, I think that's a cute and attractive way to get the new blood in. Who wouldn't want to be an older farmer at this time? Well, thank you so much, Juliana. I enjoy the rest of your day.
Thank you.
So we move over to the crypto space now, and I hear feud is what is in the air.
Oh, yes.
Fear, uncertainty, and doubt in the market. I hope this does not become a norm, right?
Well, as you were talking to Juliana, nobody wants to be a trader at this time. Well, let's see. It's all red. The bloodbath continues. Bitcoin down to $39,261 this morning. Ethereum, 2,921. The king of the altcoins is down. No one is spared except Matic and DAI here. So look at the fear greed index. Extreme fear. That's what the market is saying right now. The way you can use fear and greed index to your advantage is, when the market is extremely fearful, those are kind of like buying, opportunities right there. And right here, when the market is too greedy, that's when you, sell. Buy, sell. That's if you want to play with the fear and greed index. Let's talk to Rume Ofi now, digital market analyst. Hello, Rume.
Good morning, Ladri.
Good morning, Rume. So it's the bloodbath continues. It's the ultimate FUD is here. China has spoken. Tell us about this ban.
Wow, I think also this is an opportunity. Like I always tell my students, volatility is an also opportunity for us to make some really good money for ourselves. This is not the first time where China is banning Bitcoin and cryptocurrencies. It happened in 2013, 5th December, I must remember now, when they banned Bitcoin, and it fell down 20% from $1,100 to about $970 in 2013. Then it happened again around 2017. They said they are going to shut down cryptocurrency exchange, even their own exchange platforms, because at some point China as a country was recorded at 90% in global Bitcoin trading, which means they were at the forefront. And they are also in the front when it comes to mining these same assets. So sometimes it beats my imagination that they come up to say, oh, we are banning Bitcoin. And still, some of these guys are still trading Bitcoin. So it happened in 2013. It happened in 2014 again when the People's Bank of China, other commercial banks to stop, more like Nigeria, but they still continue because this is the asset of the people, for the people and by the people. Then it happened again in 2019 where they said, funds should not come in through China to all of these exchange platforms, but still it happened and transactions were still made in Bitcoin. And the reasons they are giving in this 2021 is so shocking that it's too risky. But these are monies from individuals, right? Cryptocurrency trading is risky. The virtual assets are not supported by real value. But the value here is being moved by demand and supply. I decide what I use my money for, not government. They also say that it can be easily manipulated. But in all of these, lives are being changed around the world. It's a global opportunity. And they also said that it's making their sovereign currency kind of threatened. I understand their point because government is just about control. But proper regulation is the best thing to do at this point, not banning Bitcoin. Because Bitcoin has made China to be consistently failing in this struggle. You can see that it happens. The market dropped to 39,000. Now it's actually 40,000. And we're seeing the market bounce back in a very short time.
All right, Rume. So, but we can't deny the fact that it is a very risky market, as they've said. But now that Bitcoin has cracked, below 40,000, do you think the bottom is close?
Yeah, I think this is healthy, right? Because some of the weak hands need to be checked out. For example, a lot of people don't understand how these work. Some of us are in this space for a while now, understand how it works. This is the time to buy. So if you think that maybe you could just get into it, not understanding some of the nitty-gritty, understand how volatile it could be, you get your hand burned. So you could expect, like I said the last time on the show, that at every significant dump, you could buy a few. Then when it goes up, you make some really good cash for yourself.
Okay.
So it's an opportunity to get even better.
Okay. All right, Rome. Thank you so much. Always great to have you on the program. Thank you. Yeah, so, Ini, some traders now will be kicking themselves that didn't sell at the previous, highs. And, this market has a way of taking back profit. So you need to be very careful in this market.
They should just be patient. Another high is coming, I think.
You never know.
I know some time ago, China also talked about having their own digital currency.
Exactly,
so
yeah.
Maybe
the
this is the path.
Yeah, maybe they're trying to take away the competition. Who knows?
Maybe. Well, we'll watch and see, as we always do when it comes to all these economics and money issues. But that's the much we can take on the program today. Thank you so much for watching. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.